Good morning, everybody. Welcome to the Hurley Investments Trade Findings and Adjustments for December 10th, which means I got to change this. That looks a little better. Let's get right into it. I don't think we need to take a ton of time today, but some very cool things happening over the last month or so. And boy, am I happy to see Boeing just continue to go up so nicely. Kind of struggled the last few days. The update back above 235 today. Yesterday was really the first big-ish down day for Boeing, coming back down and testing 230 and holding 230. So at the end of yesterday, we looked at all of our leap long calls that we've talked so much about and decided to take half off for a beautiful profit. I mentioned that here as I talked about it the last time, I guess apparently the 19th of November, a little under a month ago with you guys, and just looking for the best opportunity to book some profit. I know we had 275 leap long calls, 275 strikes, and also 330s. And we let those 330s completely run. And a little while ago, took a couple weeks ago, took off the half of the 275s. So we were letting the rest of those run. And then yesterday took another remaining half of those 275 leap long calls off and half of our 330 strike leap long calls off. So what we have remaining is more than completely paid for. And let me just and side note, we're up across all of our accounts 130,000 today, and the S&P is down 0.1%. Boy, I love these days. But a performance day, we want to see year to date just to kind of show you. So Boeing is now our second most profitable position for this year. And if you remember, as we've probably shown you previously, we really don't have much in the way of losers either. But as we'd shown you previously, that Boeing had been the big laggard for a lot of the year until maybe the end of the summer, if my memory serves me correct. But man, is it cool to see that stock, which had lost 75% of its value, and still we haven't even gotten back up to where it was, even close. I mean, we're at what, 235 today, and it had fallen originally from 330. So we still got $100 to go in share price before we really get back to somewhere around break even, and we're more than profitable. We're handsomely profitable. So just some notes, and that's how you make money in this kind of a stock market, and that's how you continue to grow portfolios throughout the years, making up something on the way down or in the case of LEAP long calls, we're dollar cost averaging to lower the cost basis that we need for those stocks to get back up to break even. That is the name of the game. And I'll be honest, this year was not a walk in the park. If I can kind of go back and take account, there were days where it was so frustrating to be in Boeing. Let me go back a little bit. Knowing that, dang it, they still had nearly 10 years of back orders and people just could not, for the life of them, see the opportunity that Boeing had. These days were not easy. These days, let me zoom in. It had gone to 94 all the way up to 180 in a matter of 4 days. And these points you're thinking, okay, you know what? It looks like people are kind of realizing it was a stupid sell-off, only for it to continue to struggle through months. And then it shoots back up. We're getting close to approving the 737 MAX. And you're going, yes, finally, people are starting to see. Oh, it's not approved yet. Still have to wait. Airline travel's not coming back anytime soon. And so we have these 4 months of just sideways to negative holding pattern. And all I can say is patience is a virtue, because we didn't need it to get all the way back to even 235. We just needed to get around, if my memory serves me, around a 180. So just getting over this 200 day to get positive. And for those of you in stock on Boeing, just how much better you think next year could be when Boeing gets back up to the 300s plus 350s. What an opportunity, and well worth the wait. So I'm going to erase this little note and say, for around 100% profit, we took off half of all leap long calls. Now that gives us so much breathing room to just let the other ones run. %100% paid for by the profit we've taken. I'm going to say %100% paid for by profits. And yes, it was at times scary to see the leap long call portions of accounts lose so much value and have to put so much money to work to dollar cost average those, and some points wonder if we were throwing good money at bad. But each day, we took it a day at a time, and seeing that, of course, they had these back orders, they had cash, and really the only reason that the CEO had come out and said, hey, government, get your act together and start funding, getting stimulus and credit available to the airline industry, was really to make sure their industry stayed afloat. Boeing is doing well. They'll get through the issues. They certainly are not in the dire straits that you imagine the airplane companies are, and they're going to be fine. They actually just, I think I saw across this morning, just delivered their first 737 MAX. So, all right. With that said, I really don't have a trade and wouldn't suggest placing a trade at this point. It does look it does look like we are getting a Christmas rally of sorts. Just looking at the market here. And as Kevin has mentioned a few times, I think on Monday, and he sent out a video, pre-recorded video for Tuesday night's webinar. Just seems to make sense that we ought to look at when there's some tax selling. We might have gotten a little bit. And guys, I'm going to put you on a quick pause. Give me just a second. All right, sorry about that. Getting a call from Kevin in the middle of the webinar. Dope. All right, so where was I? Okay, tax selling's got to happen at some point. Maybe a little bit has been happening since yesterday. S&P has come off of an overbought, which could help continue to fuel some growth. We've got, what else have we got? Really, the market is looking for stimulus to be added. More stimulus. Now they're talking about between 900 billion and 1.5 trillion, which it just makes me giggle every time I say those words coming out of my mouth, that we're talking nearly a billion, excuse me, nearly a trillion of new funding every time. So Congress funded the government for another week, and I would think really it comes down to next week when they gather again, that they need to be funded by the 18th, I think. So they can deliberate and decide if they can pull together and make something happen, or if the Democrats will want to kick the can further down the road so that Mr. Biden gets credit for getting stimulus out in this next round. Which then would be, if they're going to push that and not get a stimulus out, we're looking at another month of layoffs and people out of work, not getting the funding they need, especially the restaurant industry that is especially railing and having to lay people off and not getting unemployment funded. And goodness, what a mess. My hope is that next week they'll realize that, you know, they've got their guy in office and will not care about giving President Trump the whatever form of glory there would be in another trillion some odd dollars of stimulus. You would think that they would, or at least hope that they would have the people who are truly suffering at this time, to have them in their minds and get people the help they need for those of the parts of the economy that are suffering and struggling. But obviously hasn't happened the last, what, 3-4 months, since really August. What's another month? So can gets kicked down another week, and I think that will be the big story for next week. We have some more unemployment news. Was this morning there were higher job losses than expected, and so that's kind of eating at the market right now, but I would say we're kind of holding up pretty well in spite. So really that's it for me. Is there, unless there's some other questions from you guys, I'm happy to answer. And my recommendation for trades is to take some profits, especially if you've got some good profits on leap calls and you have 100% returns. Take half of them off and let the rest run. Those are my recommendations. Guys, are there any questions? I'll give you a minute. I'm not seeing anything come over. Glad to see all of you here. We got a decent showing. So I hope most of you caught what I was going over. Ooh, we do have a question. Abraham wants me to look at Airbnb. Or do you want me to talk about Airbnb? I don't even know their ticker symbol or Have they IPO'd yet? Huh. There it is. So I think in general, Abraham, anything this new on the, okay, IPO tomorrow. Thanks, Bill. Yes. Anything in the way of IPOs, there isn't enough to go on with earnings and years of earnings that we can compare, like you would a company that's been around a little while, right? So I would not be interested in looking to do anything with an Airbnb. I think you saw, what was the, I always want to say Grubhub. It's not Grubhub. It's the other food delivery crap. Someone help me out. They IPO'd yesterday. DoorDash. DoorDash had like a 75% return yesterday. Yeah, nothing to say. There's nothing to go on for earnings, so I don't know what to tell you, Abraham. I don't really love the idea of Airbnb right now, just because they had taken such a hit from shutdowns, nobody traveling earlier in the year, and they might get back to normal okay. But I think a lot of companies are IPOing so they can get some cash. And I think that's the case for Airbnb. All right, guys. Any other questions? Oops. Apple looking good today. All right. Any retail names? The retail names I've gone over are Target, which has kind of had its run from their earnings and doing a kind of sideways movement now. So I don't know. I kind of feel like they've already had their run, but you could possibly see a run back up to 180-ish into the end of the year. That's certainly possible. I have Target Leap calls. I was going to show you, but it looks like it logged me out. Target Leap calls. I think I have a set at 165 and a set at 170 out for past January 22 sometime off the top of my head. And they're looking good. So I'm happy to just leave those on. As far as getting in, wouldn't be a terrible time right now. I think it's going to hold this pivot point and probably go up, but you know, you could also, it also wouldn't be a terrible idea to wait on it. There might not be tons of upside in the near term that you couldn't wait for to maybe buy more on a dip. Ida. But if you wanted to do that, I would go out to past January 22 or June 22 and look for a leap close to 175. Costco is the other retail, and they're kind of doing a similar thing, holding a pivot point here. And this is one that had taken a profit from somewhere back in here, and it's just continued to go up. So I'm just waiting to see some kind of a pullback that I might be able to nibble back on for Costco. And then the other one is Under Armour, which I think you saw yesterday they hit as high as $17.94, kind of came back down over the last few weeks and months. They've gone to an overbought signal and have come back and then continued on up to an overbought and come back and has continued up, 3 or 4 times here, hitting overbought and kind of consolidating and then continuing up. I think $18 a share might be tough to get over, just because that means from around the bottom here, around $9, we're getting to 100% return, and there might be some profit taking. So that's all. Hopefully you've already had something on Under Armour, but I don't think right now is a good time to look to put money to work there. All right, guys, that'll do it for me. Thanks again. Always good to be with you, and we will see you next time. Take care.